This is the weekly outlook for this week of August 11th to August 17th. We're going to start off with some quick fundamentals and then move on to the technical side. For the US, we've had the US interest rates being maintained and also the market now starting to price in any potential September rate cuts, especially after the weak NFP data that we had and also the increase in the unemployment rate, which we saw the market was reacting to heavily about 2 weeks ago on Friday when the NFP data came out, and then also early last week as well. This week, we have the PPI, CPI, and the retail sales coming out from the US. So starting on Tuesday, you have the PPI coming out, which is inflation onto the producer side, which we know that ultimately gets trickled down onto the consumers as well. And then on Wednesday, we have CPI coming out, which is going to be very important. This is pretty much what the market is waiting for. So we have the core CPI, and then we have CPI month over month, and then the year over year here as well. The sentiment here so far is that even if we do get a little bit of an increase on the month over month or the core CPI or CPI in general, it's fine. It's not going to really take the Fed off the tracks of talking about any sort of aggressive rate cuts or any rate cuts in general going into next month. But if we do start to see a massive deviation, so coming at 0.5%, 0.6%, or anything higher than that, then the market may react to that. So this is something that we're going to watch out for. A lot of the trades that we're looking for going into this new week leading up to Wednesday is going to be a lot of the leftover sentiment from late last week, and then also any sentiment going up onto Wednesday. And what are we forecasting? Going into Thursday, we have retail sales coming out and unemployment claims. So we know that the unemployment claims have been increasing the last few weeks and even a couple of months. So that's something similar that we're expecting. But then retail sales, we want to see if the consumers have started being a little bit more conservative, or are we starting to see pretty much a range between that 0.1% to 0.4%. We will move to the technical side in just a little bit, but just to finish off the fundamentals, we're looking at the UK and also Japan. So we've had the UK Bank of England pretty much cutting interest rates by 25 basis points, and the CPI, so inflation from the consumer side, being maintained at the 2% rate in July. This week we have CPI, PPI, and RPI coming out at the same day, which is going to be that pre-London session before Wednesday. So it's going to be a pretty heavy week when it comes to a lot of the inflation data, but also it's going to be a very heavy London session specifically for the UK or for the pound, any pound pairs that you guys are trading, because you have inflation from all three major aspects of the economy. And then when you continue down onto Thursday, so Friday's pre-London session, you have retail sales coming out. And so we are expecting that there's going to be a little bit of an increase there. And then when you're looking at the yen, so we've had a lot of interesting decisions from Bank of Japan lately, and we have seen the market reacting to that heavily as well. You know, when you're talking about carry trades and when you're talking about, increasing interest rates and things like that. So we've seen 2 rate hikes so far from Bank of Japan. The first rate hike was from near zero levels up to 0.1%. And then we saw another rate hike of another 15 basis points. And currently we're sitting at 0.25%. The sentiment there is that we will maintain the current interest rates that we have, potentially going into September, just because Bank of Japan in their monetary policy statements and also the summary opinions said that they were going to keep an adaptive monetary policy. They're not aggressively increasing or tightening the monetary policy, and they are watching out for the effects of their decisions across the economy, especially between the consumers, businesses, and also the wealth of transfer from being at near zero levels for decades and then finally increasing interest rates and the transfer of wealth because of that decision across the economy and also international investors. So this week we have PPI coming out from Japan as well that we will be watching out for. So now going on to the technical side, starting off with US30, we're going to start off on the monthly time frame. And some of the key levels that we're going to be watching out for, or that price has already been reacting to, and we want to make sure that we're paying close attention to them as well, is going to be this bottom wick rejection right about here that this monthly candle has had. So a nice bottom wick rejection pushes back up and coming back close to a previous strong resistance area sitting at this level right about here. That would say 39,800. And then we've also had the current resistance area that we've had a massive sell-off from, especially after NFP. And the unemployment data. So that 40,900 mark. So right now, this is kind of the range that I'm watching out for the next couple of weeks. Coming down onto the weekly time frame, we start to see a lot of bottom wick rejections right into this area, a little bit of consolidation, but overall, we're still maintaining this bullish structure from 2020. So that structure is not necessarily broken until we can break past this gray zone here, essentially. So we have retested into this area and tested the structure a few times, and it seems like that bottom wick rejection right about here as well could be a potential retest just to continue pushing back up. But right now, there's a lot of fear when it comes to, is there a recession with especially the weak NFP data, the increase in unemployment rate. And also, this is why CPI is going to be very important, because that's going to give us a better picture of what's happening from the consumer side. And the retail sales, are they going to be a little bit more conservative? Because that's really what's going to help you move into that recession. So that's where that little bit of fear is settling in right now from the market sentiment side. But overall, we don't have any position trades set up for sells unless we can break below this zone. So until then, this week, what we're watching out for is a continued sentiment from late last week, so Thursday and Friday. For that, we're going to drop down to the daily time frame and take a look at what happened. So when you drop down to the daily time frame, you start to see a lot of consolidation and wick rejections right into this area, a little bit of break and retest just to come back and tap into this area once again. And then when you look to the left, what price essentially did was come back and just grab liquidity from the previous consolidations. And then after that, we started to push back up. This area is an area of liquidity because every time price does tap into it, we do see some good volume, either to the upside or to the downside, depending on the short-term structure that we're in. So in this case, we had that massive push up, which helped us come back and create those new highs. So on the daily time frame, we are starting to see these new highs being printed. Are we going to see that optimism essentially from Thursday and Friday to help us push back into that 39,800 level, and then maybe a little bit higher to come back and revisit into this and print a new high right about here? Because as you can see, we are starting to come back down a little bit. You are starting to see that buyer exhaustion from those resistance levels. Drop down to the 4-hour time frame, and we start to see that there is a little bit of consolidation that started forming. This new candle for this week that started forming, it gapped up a little bit, made a little bit of a top wick. So are we essentially just going to see a bottom wick here and then a push back up? So that's something that we're going to watch out for. I will not be looking for a buy opportunity until that 39,800 area is cleared out. That way we are clearing out of all these consolidation and liquidity areas, but I'm also not going to be entertaining any sells until price breaks below this consolidation and continues down. So essentially I'm looking for a sell somewhere around this 39,300 to 39,250 area and then coming back down. So as of right now, just early this week, we're going to be watching out for price to either break in one direction or another. Coming on to GJ, let's go on to the monthly. So on GJ, price has broken past a previous resistance area. This is where Brexit was introduced. And then we had a massive sell-off, and that was the resistance area that price failed to come back and even tap into for several years. So instead, what we did was just held on to this previous resistance area, came pretty much close to it, but kind of hung below it. And then the last couple of years is really when we started to see price approaching this level once again. We started to consolidate out here for a while, and then finally continue that bullish momentum to the upside. As we approached this previous resistance area, price did consolidate a little bit, generated more liquidity. How do you know we generated liquidity? Because for the following few months, we saw a massive bullish run up, finally came up and created that resistance area. And as you can see, that is a key area based off the monthly time frame. So now when we're looking at the current price action, that was just based off of what happened previously. Based off the current price action, what we start to see is something similar that we just saw in US30. Price made a bottom wick rejection into a previous liquidity area, started to reject that and push back up. So as long as price can maintain above this right about here at that 187 mark and hold on to this area as support and push back up, we're looking for potential buy opportunities. But when price breaks below that and continues down, we're looking for sells. I'm not looking for a trade anywhere close to this area. So unless price can clear out of at least a 187.1 area or so, or even 0.1 level below this, I'm not looking for any buys or sells because this is a monthly time frame level, which is going to be very strong. When you come onto the weekly time frame, we start to see confirmations of how strong this level is. Just looking at the current price action, we saw how price came up a little bit close into this area, rejected that, pushed right back down into this previous area of support, grabbed a little liquidity. How do you know that was liquidity? We finally ended up creating a new high right at that level, failed to have enough buyers into the market to push back down, came back, held onto a support, and then that's when we really started this rally to the upside. We come back last week and tapped right into that area once again, and then closed right at that level. So this week, are we going to see, that continued bullish momentum from this wick rejection to the upside? Or are we going to start to see a little bit of a top wick and then come right back down, right? So for any of those trade ideas, we would need to see certain areas to be cleared out first. So in this case, what we need to see is pretty much this consolidation area here to be cleared out, which is also the previous daily top wick. So once that's cleared out, then you have those clear buy opportunities to the upside. So I would say about 188,400 is really when you have those swing trades to the upside, or price breaks the previous daily low and then continues to the downside at 186,300 and then continues down. That's when you have your swing sells. For any day trade opportunities or scalp opportunities, you're going to wait for the 4-hour levels here to be cleared out, and then you have a clear entry in one direction or another. But understand what the limitation of your trade is going to be. So in this case, what we are starting to see when you go back up to the daily time frame is a massive sell-off, which has yet to be corrected. So we saw this resistance being formed, and then after that we saw a massive sell-off, barely any corrective moves, if anything some exhaustive moves and a little bit of consolidation, but other than that we have not had a proper retest until this moment right about here. So that's why we need to kind of wait and see which direction is the price headed towards, and then look for your entries. You're going to need a little bit more confirmation for your entries when it comes to this pair this week. Coming on to gold, we're sitting at those all-time high levels, pretty much the same thing that's happening across all three pairs. And what we have is a clear resistance right about here. 2447.3. And then that weekly or monthly bottom wick right here, which is previous wick rejections as well. We're going to drop down to lower time frames to take a look at what's happening here. Price action wise, we had a little bit of a fake out, pulled right back down into this area, and then try to come back and break above those previous areas. Once again, a quick little fake out just to come back and respect this area for a few weeks. And then finally, we had that volume to the upside of July 2024. We also have had a lot of geopolitical news that came out, a lot of tensions happening, this year so far. So that's where a lot of this uncertainty is also coming in, where obviously investors are flocking over to safe haven currencies and commodities. As there's more geopolitical uncertainties that are happening, but also what happened with the yen, Bank of Japan increasing interest rates, the Japanese yen being a safe haven currency historically, and then also stuff that's happening with the US with the weak NFP data and everything like that. Now, when we come on to the daily time frame, we do start to see that price did gap down here a little bit. So this is where the previous daily candle ended up closing right at this level, and then this new daily candle gap down a little bit. This is where it's opened up. It's starting to push up a bullish a little bit. So what I want to see is, are we just going to hold on to this area as a resistance, and then right about here kind of make a top wick and then push back down, and then potentially look for sell opportunities as price starts to start off as a scalp right here, but then some swing trade opportunities as price starts to break the previous daily low right about here, and then continue back down to the downside and grab some more liquidity from down here. The reason why I started off with a bearish sentiment is because when we're looking at the daily time frame, this was the last high or the most recent high that price made, right, from the weekly and the monthly time frame. And then after that, we start to see this lower high being formed. And so are we essentially going to see a lower high being formed right into this area once again before a sell-off? And leading into Wednesday, we are going to be playing off of a lot of market sentiment, forecasted data, and things like that. So that's going to be a lot of market sentiment that you're playing against because we don't really have very strong fundamentals just from a macro perspective coming out. It's really just going to be just economic data and what is the investors or the market anticipating leading up to that. For any buy opportunities, what we're going to watch out for is the previous daily high to be broken. So right about here, wait for price to break above that. Then you have those quick little buy opportunities to the upside. But I would be very careful around 2450 areas in general. And then you just kind of wait for your retracements, you wait for your break and retest, and then look for your continued trades. But overall, on the daily time frame, we are getting those confirmations of buyers being exhausted out. You come on to the 4-hour time frame. That's where you get a better confirmation of this gap that happened with this new candle, where you have that resistance being formed here, and then this is where the last 4-hour candle closed. This new one gapped down a little bit, made a little bit of bottom wick, as you notice that it has not broken the previous 4-hour low here, and now it's starting to push up a little bit. So you have to wait for your confirmation. If price can break above that range, then you look for a potential buy opportunity to come here, or are we just printing a new low and then pushing right back down? But this is an area of consolidation, as you can see, massive volume. So you want to be very careful when you're looking for your trade opportunities. So that's pretty much it. That's all I'm watching out for this week. If you guys have any questions, as always, feel free to reach out to me on Instagram at SharmaFX.